Sources tell Bloomberg that trading of private Facebook shares on secondary markets has been suspended for at least 3 days. Secondary markets are still relatively new, leaving many to wonder about how to interpret a halt like this. For more on what, if anything, we can learn from this news, let's bring back our senior West Coast correspondent, John Erlichman. John.
Emily, there was a lot of buzz about this story that Bloomberg broke for a couple of reasons. First of all, in the past, you've seen these kinds of halts ahead of a company filing to go public. So people were wondering if Facebook's getting closer. Why does Facebook have so much control, though, over this secondary market process? Well, it's pretty easy. Facebook has given its employees a lot of stock. Those employees have then gone, at least some of them, and sold it in the secondary market. They want to go out and buy a home or whatever. That means that Facebook is still somewhat involved in the process. They had originally cut the deal with the employee, then the employee sells the stock, and there's always stuff that can happen, like misinformation between buyers and sellers on what the buyers actually think they're getting. And so Facebook keeps very close tabs on what's going on in this market to avoid a big legal bill. The other big question, of course, is when you buy shares in the secondary market, are you getting the same shares that you'd be getting if Facebook goes public? And the answer is yes, and that'll all come out in the IPO filing, assume we get that. But one thing to keep in mind is this is like owning the shares that the insiders have. So after they go public, it's not like you can sell them the first day. There's usually a lockup period of about 6 months. So you're able to get into the stock early, but you got to hold on to it a longer time. Emily?
Thanks for that clarification, John. Now, for more on these secondary markets and what this all means, let's bring back Kevin Landis, Chief Investment Officer with First Hand Capital Management, who has coincidentally purchased many shares of Facebook on the secondary market. So, Kevin, as a shareholder, what exactly do you think this means? Does it mean an IPO filing is imminent?
Well, so before I alienate one of the most successful Silicon Valley companies ever, let me just say, we don't have any particular inside track on or insight into what the company is thinking. There are some pretty good theories, and I think most of them fall into the bucket that says you freeze things so that you can get a clear snapshot of something, and that can be part of a deliberate, responsible process, which could involve the S1. But that doesn't necessarily mean that it's happening any quicker or that it's being delayed or anything else. It might just mean that that's just something that you're doing to get a good, clear snapshot, so that later on you've got a nice, good, clean record and you don't have to go back and amend a bunch of numbers.
So maybe it does mean something about the IPO, maybe it doesn't.
Right. And importantly, as investors, this isn't going to affect our behavior in the least. We like what we've got, and we're not done.
Okay, so as a shareholder, it doesn't mean anything to you. Now, we do know Facebook shares are trading at about $73 billion on the secondary markets. As a shareholder, how big are you expecting the eventual IPO to be, and how much bigger than that?
People are gravitating towards, round numbers, which tells you that they don't really, the lack of precision also means that there's a lack of accuracy, right? People say $40 a share or $100 billion market cap, something like that. We don't really know, but those seem perfectly reasonable. Yes, there are going to be people who can argue that that's an outrageously big number, considering the size Facebook is, and then I would just say consider how many members they have. And does anybody have a constituency that big in the world? No. And consider what you could do with that, and they've only just scratched the surface of what you can do with that. The reason that Google is linking all that information together on their customers and making people cry foul over privacy is because Facebook already has way better information on you that you serve up for free. And the people at Google certainly understand that once they get better at monetizing that, that's going to be an amazing engine. So
we're going to be talking about that Google story a bit later in the program. But Kevin, we were following some of these tech companies on the private markets before they debuted, like Zynga and Groupon. Some of them had disappointing exits. Does that at all concern you as a Facebook shareholder?
Well, markets work, and so some of these are going to be overpriced and some not, I think. So we're pretty confident and pretty happy with our Facebook position. There's a reason we made it our biggest position, and there's a reason that our intention is to continue adding to it. As for the others, the thing to remember here is it's a company, it's a stock, like any other. You have to make up your own investment decision. The fact that you have an IPO event really shouldn't fundamentally change what the underlying company's worth to you. You still have to do your homework, and you still have to weigh it like any other company.
Sometimes you come out on top, sometimes you don't. All right, Kevin Landis, Chief Investment Officer with First Hand Capital Management. Thanks for joining us there from New York.